Hi, this is Prashil coming to you from Mumbai, and you're listening to the Equitymaster's Stock Market Wrap Up. In today's edition, I'll be taking you through what moved the markets over the week. So let's jump right in. Pharma stocks are buzzing. The BSE Healthcare Index is up by over 3% in just 1 week. We'll be taking a look at the top developments. While the GDP numbers are encouraging, the manufacturing and services sector's pace is slowing down. Another worrying trend is the rising fuel prices, but we have help at hand. Research analyst Sarvajeet Bodas will help us understand what's going on with crude oil prices and petrol prices. Now, a quick look at the broader markets. Asian and European share markets traded in red throughout the week amid fears of a repeat of the 2008 global crisis as emerging markets continued to suffer. Back home, Indian indices too witnessed volatility on the back of rising crude prices and a depreciating rupee, but they were able to make a moderate recovery on Friday. With the markets out of the way, let's look at the key stories in focus today. Pharma stocks are in the news all this week. The BSE Healthcare Index has outperformed its peers and it's up by 3% in 1 week. Looking at the top stocks in focus, Aurobindo Pharma was among the major movers as the company acquired the US solids and dermatology business from Sandoz for $1 billion. Sandoz is the generics unit of Swiss pharma major Novartis. The deal, which is the largest outbound pharma deal by any Indian company, makes Aurobindo Pharma the second largest maker of generic prescription drugs in the US. Moving on to Lupin, the US drug regulator, the US FDA, inspected Lupin's Tarapur, Maharashtra facility and issued one procedural observation which the company plans to address shortly. Meanwhile, the US FDA also inspected Sun Pharma's major Halol, Gujarat facility and issued 6 observations. While the company has not clarified yet, the observations are procedural as well. Moving on, while India reported robust GDP numbers for the previous quarter, data from the Purchasing Managers Index (PMI) shows that the manufacturing and services industries seem to be slowing down. The services PMI is the reading of the country's services sector output and is updated monthly. A reading above 50 indicates expansion, while any score below the mark denotes a contraction. Services PMI for August stood at 51.5, which is down from 54.2 in July. This is primarily due to a slowdown in new business. While the country's dominant economic sector continued to expand, it did so at a much slower pace than in July. Meanwhile, the manufacturing PMI, which measures manufacturing activity, showed a loss of momentum as it declined to 51.7 in August from 52.3 in July. With the current difficult global economic climate, it will be interesting to see how these sectors perform in the coming months. Now, speaking of a difficult climate, and one of the major reasons for this is rising crude oil prices. I'm sure you must be feeling the pinch as domestic petrol and diesel prices are hitting new all-time highs every day. With petrol prices hitting the 87 rupees per litre mark here in Mumbai, there's an ongoing joke right now about a race between the rupee, petrol and diesel prices and to see which one of them hits the 100 rupee mark first. But at this rate, the joke might even turn into reality. But Sarvajeet Bodas here, research analyst at Equitymaster, does not really feel so. And we have him here to answer all of the questions that you might have about the recent rise in crude oil prices. Hi Sarvajeet, it's great to have you on board.
Thanks, Prashil.
So let's jump right to the questions. So Sarvajeet, what's your take on the high crude oil prices? What's really going on with the fuel prices going up and up every single day?
So Prashil, if you see on in Jan 2018, the crude prices were around $60 a barrel, and currently they are hovering around $70 barrel. So that means an increase of around 12-13%. So what is happening exactly? So if you want to analyze crude prices, you need to see demand and supply. So we assume that demand is constant, demand is not changing. So the action is happening on supply side. There are several factors that have contributed to supply side dynamics in crude oil. So factors like trade war, weather conditions in US, then trade sanctions on Iran, and some internal tensions going on in Venezuela and Libya that have resulted in decline in supply side, and this is a major reason that we see spike in crude oil prices. So if you see, the September month is famous for hurricanes in US. Right. So there is Hurricane Gordon, led to precautionary closure of rigs around Gulf of Mexico, and that threat is continuing. The second is Saudi Arabia is under pressure to quickly increase its production of oil, but those increases are not enough to compensate what is happening with other oil producing countries such as Iran, Libya and Venezuela. Iran oil has seen a major dip in its production, so it went below 1 million BPD mark in August compared to 2.3 million a month before. So that is a sharp decline that you've seen in Iran's production. And India and China, basically they are the major importers from Iran oil, and their stance is continuing to import from Iran, and China took a strong stance. But India is taking a soft stance now, and India is looking to diversify its imports. And so this is overall macro picture going on as far as crude oil is concerned.
So with all these major crude oil producers and suppliers facing so many pressures, it seems that the prices are going to remain high for a while. So what do you think, Sarvajeet, is the impact of high crude oil prices on India?
That's a good question. Basically, as you know, India imports around 80% of its oil requirement. Okay, so that's a staggering number. And India is currently facing twin pressure of falling rupee as well as rising crude oil prices.
Right.
So rising crude oil price have several implications, and first of all is that leads to a rise in inflation.
Right.
And if inflation rises, there is a pressure on RBI to increase interest rates.
Right.
Yeah. And if suppose crude further increases, then there will be pressure on government to cut excise duty. And if government cuts excise duty, that will impact its revenue.
Right.
Yeah. So uptick in prices will have burden for domestic refiners as well, and there is an increase in risk of subsidy burden sharing for domestic upstream oil companies, and that could impact its profitability. And similarly, there are several companies as well, like logistics, paints, dye, chemical companies, airlines, and they could feel the margin pressure.
Right.
If these companies are not able to pass on the rise in crude oil prices, rise in the input cost, so it will be difficult for them, and their margin could take a dip.
Right.
Yeah. So as I mentioned earlier, higher crude oil prices brings additional pressure on the government's budget, and that impacts the fiscal maths. So that is about it. And it may be a situation that government may force to cut excise duty, and if say petrol goes to above 90 or something. So that is a big risk there.
Wow, that's a big impact, not just on the government, but also a lot of companies which rely on crude oil for raw materials or as their primary product, right? So, Sarvajeet, I'm just curious, with petrol in Mumbai at 87 rupees per liter, do you think it can go up to maybe 100 rupees per liter, as the joke goes?
I don't think petrol will go above 90. 2019 is a general election year. Next year there is an election, right. And government will not take any risk from here on, and they will put pressure on oil companies to share the subsidy burden. And I think government will intervene if petrol goes above 90. I think that is a psychological level that any commonwealth will feel pressured if petrol touches 90. So I don't think it is a rare possibility that petrol will touch 100. But considering if crude goes from here, then there will be a difficult situation that we cannot predict.
Well, that makes a lot of sense. The government won't just stay mum for a long time. So Sarvajeet, how do you play on this situation? Like, what steps can listeners take?
So we recommended one company in Stock Select that will set to benefit if crude price stabilizes at $60 to $65 range, because one of its segment which derives around 40% of its revenue, that will revive, and company will benefit if crude stabilizes at $60 to $65 range. When we gave that recommendation in May, that was buy at lower, but subsequently that recommendation is live now, and Stock Select subscribers can benefit if crude stabilizes at $60 to $65 range.
Well, thank you very much, Sarvajeet. So that was Sarvajeet Bodas, research analyst here at Equitymaster, and I hope you found his insights interesting. Well, before signing off, we would like to know if you like our podcast. Is there anything specific you want us to cover? We would love your feedback. Just visit equitymaster.com and drop us a line. We look forward to hearing from you. Happy investing.